We have lots of news in the housing market, and one of the hot items, one of the hot topics right now are rents are up in single family homes, and they are up across the board for multifamily. Rents were up in May about 2.5% in multifamily in May. And right now, we're going to take a look at a couple of articles here, share my screen. And if you go to CNBC Real Estate, historically high lumber prices are coming down. So I know a lot of home builders have delayed construction, put a stop to construction due to prices. They don't want to get caught short. Um, Mortgage refinances are up as rates drop. So the market is definitely sensitive to interest rates. And we've talked about that. The one thing that could really affect the housing market values in the housing market and demand are interest rates. But the big one here is rents for single family homes see the largest gains in 15 years. And there are a lot of institutional buyers buying single family houses as fast as they can. They're buying entire communities, built for rent communities. But rents are up in single family homes. So it's a great space to be in terms of rent growth and demand. There's a lot of areas where there's waiting lists for single family home rentals where people are moving into the Southeast and into areas like Arizona, um, as well as Nevada. Some of the bigger states, Texas, where we're seeing a lot of population growth, a lot of people moving into those areas, leaving especially like the Northeast and the West Coast to kind of move into lower tax environments and a better cost of housing. And with remote work, a lot of companies are going back to work, but in a lot of these areas, there's waiting lists for rentals. Rental demand is at all-time highs. Prices are going up. Multifamily rental markets, again, it's rebounded. Collections for June are in the 70 to 80% range for most multifamily owners. So the big event that everybody was looking for there never actually hit because of the unemployment assistance that was given by the Fed, which is going to expire here soon, as well as a lot of states and the rental moratoriums, things like that. But collections have been pretty good. So there's no huge wave of issues in the multifamily housing industry. Of course, there's always pockets, there's always markets that are doing better or worse than others. But right now, rents are up 2.5% in May across the board, according to Yardi Matrix. So we've seen record increases in rents. A lot of multifamily syndicators out there working their value add business plans over the last couple of years have seen 5 to 10% rent growth over the last year or two. So it's really, really interesting what's going on out there right now. There is a demand for housing in all segments of the markets in these hotter markets. Now, this is not every market everywhere. These are the hotter markets where there's a lot of demand. So that's putting pressure on cap rates. It's driving prices higher on these assets, but financing is still good. It's still very attractive. Here's the um, article here with Blackstone Group. They're buying houses and they're buying multifamily units, 5,800 apartments in San Diego. Blackstone Group, True America, they buy 5,800 apartments in San Diego. So there's a lot of competition for these assets, for single family homes, for multifamily homes. It's a great space to be in. Everybody needs housing. Multifamily was one of the best performing assets through the pandemic. And a lot of that was due to the support that the Fed and the states gave to people that lost their jobs and were struggling to pay rent, pay their mortgages with the forbearance programs, things like that. And a lot of people were calling for the housing market to crash and for rental properties to go into foreclosure because of these issues. And we did not see any of that come to pass. The markets did nothing but get stronger. Demand has increased, supplies have dropped, and we're going to see a shift. We've got a big Fed meeting coming out here this week. Today is Wednesday, and the Fed is meeting right now. They haven't come out with their results yet, so this video will probably be after the Fed meeting. So if interest rates go up, if the quantitative easing bond purchase program is tapered, you will see dramatic effects in the markets. You will see the stock markets start to taper back a little bit along with it. And you will see, as interest rates rise, demand for mortgages, refinances, and housing will drop. And then it's going to take a good move of 1 or 2% to really have any significant effects long-term in housing and in multifamily. And it will affect cap rates as interest rates go up. Cap rates go up as interest rates go down. Cap rates go down. It's all supply and demand, and it's all about cash flows. So keep an eye on things out there. It's a great time to be in the market for single family rentals as you know, for an investment. The other thing you got to watch is income levels. Incomes have not kept pace with rents. So at some point there will be pushback, just like in housing prices. We're starting to see pushback in some areas. You can only move things so far before you crack that affordability index where you get the pushback. So it's a fine line. The best way to do it is to make sure you understand your market, know what the going rents are, know what the values are, and understand where those lines are of resistance that you can go to, whether that's markets, whether it's housing, investments, whatever it is. There's always going to be a level of resistance that you just don't want to try to push through, because then it will backfire. So do your research, study the markets, keep an eye on demand, keep an eye on interest rates, watch the Fed, and you will be well positioned to take advantage of any movements in the markets.